Hi everybody, Thomas at Rebel Income here. Today I'm putting my focus on the energy sector. It's seen a lot of volatility this year, but the good news is that a lot of stocks in this sector are trading at or near the kind of lows that often translate to useful value. Coterra Energy isn't one of the biggest or most recognizable energy names, but they are an important player in the exploration and production of shale oil and natural gas products. With winter settling in across the United States, I think that means that the timing could be good for thinking about adding Coterra to a value-driven portfolio. Let's dive in. The long-term trend as shown by the 200-week moving average on Coterra is clearly going up, and that's despite a pretty significant decline from 2022 at a peak at around $36 per share. That upward slope of that 200-week moving average has provided some support for the stock over the past few months, as it has rallied from a low at around $23 in June and July up to a peak at the end of September at around $30. That rally coincides with a generally upward movement in the 20-week moving average. However, the decline in price over the past several weeks is the reason the 20-week moving average has started to flatten out a little bit. With the stock dropping towards the 200-week moving average, it's tempting to think that maybe this is a possible bullish level 1 kind of a setup. However, the distance between the stock's current price, a little bit below $26, and the 200-week moving average at around $22.50 suggests that there's a little bit of an area here that I would be inclined to call a trap zone. That means there could be some accelerated downside in the stock right now, especially given the way the bearish momentum has been picking up over the past 7 or 8 weeks. Now, does that mean that this is a stock that you're not going to want to work with at all for any kind of a value-based opportunity? Let's go ahead and dive into the numbers and see what those actually look like right now. Like a lot of stocks in the energy sector, Coterra has been feeling some of the effects not only of high interest rates, but also of geopolitical pressures across the world that are putting pressure on energy prices. And as a result, it's not really too surprising that the stock has a pattern of declining free cash flow over the past year, from about $3.7 billion a year ago to the current number at about 2.32%. That said, this decline is something to be concerned about. However, the fact that free cash flow is at $2.3 billion and offers a net free cash flow yield here of 11.6% is still pretty interesting. Liquidity, as shown by cash and liquid assets, has actually been increasing over the past 12 months, as we can see from about $683 million to the latest number at $856 million after the last earnings report. It is worth noting, of course, that cash peaked 9 months ago at $983 million, so we do have a negative pattern over the past 9 months. Long-term debt, on the other hand, has been declining over the same period from a little under $2.2 billion a year ago to just a little under $1.6 billion as of the last quarter. Paying down debt is a positive thing that improves companies' overall financial flexibility. Coterra is also a company that operates with higher than normal margins, even in the energy sector. So we can see over the last 12 months, this number was 33.96%, which is very, very healthy. It did decline down to the last quarter, where this number is now 23.82%. The decline is a concern. It is a confirmation of the declining pattern of free cash flow that we can see. But again, given the current economic environment and geopolitical pressures, as I already mentioned, it's also not too surprising. One of the things that's really interesting about a lot of energy companies right now, for a value-oriented dividend investor like me, is not only the fact that the value proposition is extremely attractive, with a fair value target at around 66% above the stock's current price, and a fair value target at a little under $43 per share, but also if you buy the stock at its current price right now, you'll be able to participate in its healthy dividend payout, which is at about 4.5% right now over the last 12 months. All told, these are very interesting elements. Are the declines in free cash flow and net income enough to chase away a value-oriented investor with the kind of value proposition that is in place? Possibly. It would make sense if you wanted to wait for another quarter or two to see if these numbers could begin to turn around. At the same time, This is also not atypical for stocks that have been following a downward trend that is actually extending over the course of a couple of years. That means that this is a very interesting stock from not only a value investing standpoint, but also a contrarian investing standpoint. Oftentimes, value investing and contrarian investing dovetail with each other and complement each other nicely, and that does seem to be the case right now with Coterra. If you are going to be considering the stock for any kind of a trade right now, whether you're talking about a short-term trade based on current momentum, or whether or not you want to think about buying it for the long term and holding it for the time being, it makes sense to take the time to think about what kind of reward to risk you're going to be looking at before you make a final decision. Let's go back to our stock chart and let's check things out on that basis. I mentioned that the stock has been picking up bearish momentum over the last 7 or 8 weeks. That means that right now the expectation should be that it is going to continue to drop, at least until it finds a practical support point. One of the ways that I like to try to look for likely support or resistance levels is using previous pivot lows and pivot highs. We can see that Coterra has had a lot of pivot activity right around 2450 over the past couple of years. Those repeated pivots in that area suggest that 2450 is likely to be a solid support point, with the stock about $1.25 away from that price right now. What about immediate resistance? The simplest way to identify that, again using previous pivot lows or pivot highs, is to go back to the most recent peak, which we can see occurred at around $29 per share. That means the stock would have to reverse its pattern of the last several weeks and rally up by a little over $3 per share in order to get to that point. That provides the most immediate analysis method for identifying our reward to risk. Let's go ahead and take a look at that. The stock is a little bit under $26 right now. I'm going to call it $25.75. That means that in terms of upside right now, there's about $3.25 against about $1.25 of downside, which means that the overall reward to risk ratio right now is about 2.5 to 1. That's more than the 2 to 1 that we usually like to look for. So we did see the stock find a support point anywhere between the stock's current price and 2450 and begin to reverse upward again. That could be a good opportunity to place a very short-term trade. That setup also provides some support for the idea that Coterra looks like a big bargain. Thanks everybody. I hope you found this useful. As always, if you like this video, go ahead and subscribe to my channel by clicking right here. You can also learn more about my Rebel Income analysis method and trading system by clicking on this video right here. If you'd like to subscribe to my trading alerts or my reports, you can go ahead and click on the link in the description area to see my Patreon page. Thanks again, everybody. Have a great day. Talk to you soon.